Well, US markets have started the year on a cautious note, with stocks more sensitive to earnings as central bank activity and macro risks reduce. But underlying confidence in equities remains strong, while short sellers have returned to the market in force. Today we're joined by SunGard's Aztec Analytics Senior Vice President David Lewis to discuss short selling activity. Thank you for joining us today, David. Now we're showing a chart of the most shorted stocks in the US market at the moment. We can see JCPenney has a lot of shorts over it. Could you tell us a bit about sentiment around that stock?
Well, when you see short selling in a particular stock, what you're seeing is it's a measure of sentiment. And if short selling is going up, then that's a negative sentiment message. JCPenney is very interesting and very topical because the last week or so they've announced the closure of, I think, 33 stores in a bid to get back to profitability. And whilst that created a short-term positive impact in the cash market, what we have seen is an increase in short selling activity further, even after that news, to an all-time high of positions at the short side.
Okay.
So it's a negative sentiment.
Right. And more broadly, could you tell us about which sectors have seen the greatest increase in short selling activity over the past year?
Well, it's very important to look at sectors because the overall message, if you like, from, say, US equities over the last year, the volume of short selling has gone up around 13%. But as you say, the sectors are much more important. You've got to look beneath that number. So utilities, for example, telecoms and energy have all seen north of 50% increase in volume over that period of short selling. So it's a big negative message in terms of sentiment.
Okay. And on the flip side, which sectors have seen the largest falls in short selling?
Well, that kind of maps to what we're seeing in the wider economy. So you can see that food staples, for example, and automobiles have both seen a significant decrease in short interest, which represents a positive message and an expectation of future earnings from those two sectors.
Okay. And finally, what does short selling activity at the moment tell us more broadly about the outlook for investor sentiment?
Well, short selling is a great message. It's a great indicator of future expectations and sentiment. We sometimes call it the canary in the coal mine. What you have to do, particularly on the long side of investors, is look at the short side message. It is an important message, it's a great indicator, and avoid it at your peril, or don't listen to it at your peril.
Thank you, David. That was David Lewis, Senior Vice President at SunGard's Aztec Analytics, and I'm Jane Sell for The Street.